Hello and welcome to this week's episode from Conservative ETF Investor for your stock market update. I am your host, Ken. Today's date is July 2nd, 2017. We are currently looking at the homepage for Conservative ETF Investor. Once this video is done, I'll upload the link right here so you can just click right there in order to see the video or just capture it from YouTube. Here is our current recommendations. The most important thing that I want to bring to your attention is that our current posture of the 7 ETFs over the 5 markets that we watch, our current recommendation is a hold recommendation for all of them. On this page, you can see currently when our transaction date occurred and what our transaction was, which was buys across the board, what the price was on the transaction date, also what the current closing price is, as well as how much profit and loss and money, as well as percentage, dividends, and everything that you want to see, the beta of each of the positions, the portfolio beta, which is 0.63. You can also, if you scroll down from the home page, you can also send me an email, which is right here. Fill out the contact information form. Also, under our current recommendations, you can capture the same current recommendations this way. And about us, you can get about us on our about page. And also on our about page, you can see what our recommended portfolio is, which is right here as well. All right, so I'm just going to plant this on the home page. That is it for now. Oh, and under more, we have our disclaimer. So you can read our disclaimer there as well. And again, contact information, which is on the home page, which is right there. Okay, so now that you have all that information about our website, and there'll be a link to the website at the bottom of the video on YouTube as well, we are going to jump right into the charts. And here we go. Well, before we jump into the charts, stop 1 second. First thing I want to bring to your attention is how the portfolio is doing. Since our buy points, where portfolio is up 14.48%, and year to date for calendar year 2017, we are up 7.3%. As a comparison against that, we can go down and see how well the S&P 500 is done. And the S&P 500 is up since our buy recommendation. Well, actually, this is since our buy recommendation in 2016 of 14.61%. Let's see if I can tell you what the S&P 500 has done over the period of 2017. So if we go to my holdings, we can see that the S&P 500 is up 7.91% and we are up 7.3%. So just barely lagging behind that, but we're much more diversified than just the S&P 500. But you can see it's pretty much trailing very close to that index. Okay, we're going to jump into the charts now. And our first chart that we want to bring to your attention is the S&P 500. And the symbol is SPY, and this is traded on the New York Stock Exchange. We use weekly charts for our evaluation based over a 5-year time horizon. We use candlesticks, so each one of these candlesticks right here is a representation of 1 week. Our last buy recommendation was on 11/7/16 at $210.98, which is on this candlestick right here. And the ETF is trading in an upward channel, trading in an upward trend channel. And it's kind of like a wedge too. You can see how we have it more tapered off here compared to the opening. And last week, the S&P 500 lost 0.55%, but it is still within this range. It is we have 2 moving averages. We changed just recently. We're now doing the 17 and the 34 exponential moving average. So the blue is the faster, the red is the slower, and the blue is above the red, and the ETF is above even the blue. So this is all very bullish signs. Let's move over here to the thumbnail, and you can see that on the last candlestick, last week's candlestick, is it was an engulfing bearish pattern because this candlestick completely engulfs the body of the previous candlestick, and we close to the downside. That's considered a bearish pattern. So from that candlestick, you'd expect weakening in the position. For our two momentum indicators, we use the MACD at default settings. That's the moving average convergence divergence. And underneath that, we use the slow stochastics. Now, let's take the MACD. The MACD had a bunch of turmoil going through it, but it is currently on the underneath it's underneath its signal line. You can see that numerically over here, 5.2 compared to 5.3 for the red. The red is the signal line. The MACD is the black line. Okay, so we're currently below that. We're in a very high level, and because this is an oscillator that needs to oscillate, it goes down below zero and above zero. It takes a long time for this to happen, but we should see some softening in this ETF. And the easiest way for this MACD to go down is for the price to go down like this. See how this went down right here? And the MACD followed. Okay, so the slow stochastics, it's below its signal line, but it is above 80. So being above 80 is bullish, but being below its signal line is bearish. And that is it for the S&P 500. So the expectation is, with the bearish engulfing candlestick, with the MACD being at an elevated level and now trading below its signal line, and with the slow stochastics being below its signal line, I have an expectation for this ETF, the S&P 500, to come down and at least touch its 17-week EMA, if not cross below that, and then see if it holds support at this lower trading channel, which is a support level, which is pretty close to the 34-week exponential moving average. And we'll see how well the S&P 500 holds up once it gets to those levels, but I expect them to reach those levels over the next few weeks. Moving on to our next chart, which is QQQ, and that is the NASDAQ 100. This is technology traded on the NASDAQ exchange. It had a poor week, down 2.55% for the week. And here you can see that for the longest time we were in just like the S&P 500, we were trading an upward channel wedge formation, but the NASDAQ, being the stronger of the ETFs, broke out. You can see right there that decisive candlestick breakout right there, and has been since riding above it on this. Now, which once acts as resistance, now acts as support. So the expectation is for it to come down here, bounce off of this, and bounce up. But let's look at our momentum indicators. Again, what do you see here? The most recent candlestick week, which is last week, is a bearish engulfing candlestick. Same for the S&P, now same for the NASDAQ 100, symbol QQQ. The MACD, also below its signal line in elevated territory, should soften. The slow stochastics is now trading below 80, below its signal line, bearish plus bearish. So we're bearish here, and we are bearish on the bearish engulfing candlestick. The expectation is for it to probably break through this support level and break back into this trading range. Now, if I take my stockcharts.com and go to, I put myself on inspect, from our current level to this bottom trading channel, you'll see on the left-hand side, that's a 10.57% drop from our current levels, where we just closed at 137.64. So that's a corrective territory, so you can have a correction and still maintain this bullish formation. The only thing that we can do is wait and see. Here at Conservative ETF Investor, our sell point would be if it would close below this body right here. So that'd be below 129.05 as an example, and then we would be out. But otherwise, we are in, and we are still in, and that's why our recommendations, going back here, current posture, we're still on hold recommendations for everything. Just explaining what our exit strategy would be, because we don't hold forever. We have a buy, hold, and sell mentality here at Conservative ETF Investor. Let's move on to the next ETF in our list, which is small caps. We look at symbol IWM, which is the Russell 2000, traded on the New York Stock Exchange. Again, weekly charts based over a 5-year time horizon. Here, the ETF, which had a flat week, up 0.01% for the week, has been trading in an upward trend channel for quite some time, and we are just hugging and kissing this lower support level and not breaking beneath it. We did come through on an intra week at one point in time right here. You can see that candlestick dropped into below the 17-week EMA, but has closed above it and has been staying above it ever since. Let me move over to this to the thumbnail. Now on the thumbnail, you can see that we don't have a bearish engulfing candlestick, but we do have a black candlestick indicating that it closed lower for the week than it opened. Okay, now the MACD, looking at our momentum indicators, the MACD has since softened up off of its high nicely and has come down, so it's above 2. It's trading at 2.5. You can see that right there numerically, or right here numerically. It has still, but it's still trading below its signal line, which is a bearish signal, but it's above 0, which is a bullish signal. So that's it for the MACD. On the slow stochastics, came up, just kissed the 80 and came down, and now it is trading below its signal line. You can see that numerically over here, 78.8 compared to the signal line of 80.04. So we're below 80 and we're below the signal line, which is bearish plus bearish. But we are right here at this support level. If it holds support, we're fine. If it breaks through, it's actually, this is the main cluster that we're looking at. Let's see if it holds this. If it holds this, we're in it. If it breaks down below this, we are going to be exiting our position here for IWM. Moving on to the next ETF in our list, VEU. We believe in a diversified portfolio. That is why we have multiple different positions. This position is the Vanguard All World, excluding the United States ETF traded on the New York Stock Exchange. Symbol is VEU. And again, it's a weekly chart, 5-year time horizon. It had a week of 0.14% gain for the week. Well, it's kind of a flat week. Let's move over. All right. Now, what's happened here is we had we were trading in a converging upward trend channel that it broke above. There was a downward resistance line here, a declining tops resistance line broke above that, and it is since trading above both, and it is in a consolidation phase. You can see that consolidation phase right here. We do have a black candlestick, but it is traded up for the week. Okay. What do we close at? 50.03. All right, that's because on the previous week it was a red candlestick and it closed here at the bottom. Here we did close at the bottom, but it is above the previous bottom's candlestick. That's why it's not red. What else? Let's move down and look at our momentum indicators. We are still above the signal line on the MACD, but it is in a high level in comparison to the last 5 years. The slow stochastics looks like it was trading below its signal line and trying to break out above its signal line. Numerically, though, it's at 85 compared to 87, so it's still below its signal line. And that is it for the VEU, all world excluding United States. Our next one is TLT, bonds. Okay, we do recommend that you buy a individual bonds rather than have a bond fund, because then you don't have to deal with this volatility for your fixed income allocation of your portfolio. But because we cannot follow individual bonds for the purposes of our recommended portfolio, we follow the TLT, 20-year Treasury Bond Fund, and this is traded on the NASDAQ. Symbol is TLT. Again, weekly chart, 5-year time horizon. Now here on the TLT ETF, you can see that we had a double bottom, bounced off of that one, and has since been rising ever since. Let's move over. Oops, sorry about that. I grabbed the wrong item. I want to go over to the thumbnail here. Bearish engulfing candlestick, third one that we've seen in our charts. And you can see that clearly. And what a long downward candlestick that is. We're still trading in a channel that's going up. It's still an upward trading trend channel. Here you had a declining tops resistive line. We broke above that now, which once acts as resistance, now acts as support. So we can still maintain this upward bias by coming down here, bouncing off of this support line and going up. We are still, again, on a hold recommendation for this position. We're a hold recommendation for all of our positions. Now, let's look at the MACD. MACD is trading above its signal line with a nice distance, and it's now crossed from below zero to above zero. It's 0.963. Those are bullish. That's a bullish action to do that. The slow stochastics, you can see it had a bumpy ride coming down from its below 20 position, which is our buy point. This blue line right here is our buy point, to where it's at now. But where it's at now is above 80, which is bullish, but it's trading below its signal line, which is bearish. Hence, we might see some more softening coming down, bouncing off of this support line, and then going up from there. That is the expectation, or possibly finding support in the 122.5 area, currently trading at 125.12. All right, so that's TLT. Let's move on to our next one. This is our real estate position. Our real estate position, we are trading the Vanguard Real Estate Investment Trust ETF, symbol is VNQ, currently paying a 4.43% dividend annually on a quarterly basis. Now, let's see what we got here. Now, it's difficult. You can see this large red candlestick as our latest week. The one just before that was almost like a doji because it opened and closed flat for the week. This is another bearish engulfing candlestick. This is our fourth one that we've seen so far. Okay, the Vanguard VNQ lost 1.09% for the week. Now, on the MACD, you can see that we've bottomed here and we have been rising from below zero to above zero. It's kind of had some gyrations. You can see all that volatility, that back and forth action that happened there. But we are currently trading above the signal line and above zero. Bullish plus bullish. Slow stochastic, same thing. You can see that volatility happening right there. It's above its signal line, but it has since turned flat and is getting ready to cross below its signal line. Now, this is a bearish engulfing candlestick. This action happened right at this resistive line. You can see that we had a tops. There was a tops trend line here and here. I don't want to say it was a declining top because it was more like an ascending tops resistive line. This is a declining tops line that we had here, an overall declining tops trend line. Now we broke up above this one, and we did that. You can see two candlesticks there plus that one, but this last one, which is just the most current week, which is this candlestick right here, came up, touched that line right there, and has since backed off and closed down, bearish engulfing. The expectation now is for it to come down and find support either on this support line or break through that and find it at this one, which has plenty of support at that in this 80s level. We're currently trading at 80.23, $83.23 per share. Okay, that is it for VNQ. Moving on to GLD. GLD is gold, so we have a precious metals position in our portfolio. It had a negative week. It lost 1.18% for the week. Now, let me come over here so you can see the thumbnail. Now, this is a declining tops trend line that has been in force for many years, at least 6 years. And it's cannot get above it, close above it, and go to a positive position yet. Once that happens, I think that's going to be extremely bullish for gold, but it has not happened yet, and it still hasn't happened. We hit most recently right in here. We hit it, came up, cannot close above it. Sellers come in, and buyers dry up, and it closes down, and it has been trailing down ever since. The expectation now is for it to find support somewhere at the 115 level. Hopefully it should find support there. If not, we expect support to be below that, somewhere at the 114 113.5 level. If it breaks below that, then the next support level would be this one here, which would be something like 107.50. We'll see how well this does. All we can do is see if it'll hold the support. We currently have a hold recommendation on gold. Looking at our momentum indicators, the MACD has topped. It is traveling down. It is now below its signal line. And we are still above zero, which is bullish, but at its current trajectory, it's going to drop down below zero and turn bearish. Slow stochastics below its signal line, below 80, bearish, plus bearish. The expectation is for it to come down and at least test the 115 level and then see if we hold support there. So that's where we are with gold, currently closed at 118.02. And that is the last of our 7 ETFs that we follow. Now, the next thing that I would like to take you to is our volatility indicators. The first one, we look at 2 of them. The first one that we're going to look at is the VIX. This is the most common one that most people like myself talk about. And this one pretty much tracks the S&P 500 and is now we looking at a daily chart rather than a weekly chart. For the VIX, we go to the daily with a 1-year time horizon. Each candlestick represents 1 trading day. Now, on the last candlestick we had, it was a red candlestick. We have 2 moving averages here. We have a 50-day EMA and the 200-day EMA. But the 50-day is trading below the 200 with a nice wide margin between the 2. The ETF, excuse me, not the ETF, but the index has since come up and closed above the 50. So at this rate, you can see that volatility is beginning to increase. Down below here, I've got the S&P 500. By the way, this is an inverse indicator. As the VIX goes up, the ETF money per share drops down. So as this is going to come up, this is going to drop off down. Now, it tried to get up 2 or 3 days ago, but buyers came in and did not, and it dried up that this volatility indicator. So when this volatility indicator here is the VIX is dropping, the S&P 500 goes up. Generally, that's how it works. It's an inverse correlation. As this drops down, the S&P 500 goes up. But on the converse, if this goes up, the S&P 500 goes down. Okay, so this is we're still in a pretty bullish posture here with the 50 being below the 200, good wide margin, but there are some signs of caution prevailing as it is now trailing above, the index is above the 50-day EMA. Okay, let's move on to the next one, which is the VXN. This volatility indicator tracks the NASDAQ 100, and its symbol is a dollar sign VXN. And here you can see the different picture compared to the S&P 500. The NASDAQ is showing that the 50-day is just getting ready to cross above the 200-day. I mean, it is just zero point 0.01 point away from being flat with it. So, I mean, and the index is way above both the 50 and the 200. So all it needs is probably one more trading day, a close above here, and boom, you're going to cross above it. Once that happens, our posture is going to change from a bullish posture to a bearish posture for the volatility indicator. You can see here that the NASDAQ 100 symbol QQQ, which we have in the chart down here at the bottom, has topped and has since come down. As this has come down, volatility has come up. So that is a word of caution about the um, that we can see that's going to happen in the NASDAQ stocks with VXN coming up. So there is risk involved with the VXN. And that is the last indicator that I want to show you. Okay, one thing I want to show you before we wrap up today, one of the things we look at here on our evaluations when we evaluate an ETF. So here, I want to bring your attention to this one here, which is QQQ, the NASDAQ 100. We have a hold recommendation. Now we look at seasonality to determine how the seasonality is of the ETF. Over the last 10 years, there is a 100% probability that the stock is going to close higher than it did, and the average that it goes up is 4.2%. Current monthly return is down minus 2.32% for the month. That has a differential of about 6%. So there is a 6% possibility of gaining on the NASDAQ 100. Although the risks have increased, and because the volatility has increased over the last 10 years on a seasonality basis, this is a very positive month normally for the NASDAQ 100. Now, bringing you over to the charts, I've got two charts up here, the daily and the weekly. Now, this is a 1-year time horizon daily chart for the QQQ. Here we were trading in an upward trend channel. We have since closed and is below it over the last couple days, trading days, and we are hanging right there. I'm going to bring you over to the thumbnail. Not on Friday, but on Thursday. It looks like we hit a low of support on Thursday and now is trading up. And according to our seasonality, the expectation is a potential gain of 6%. Now, from where we are at right now, that's for the month, okay? So actually the month, the last trading day was the 30th, so we don't even have the beginning of the month yet. So if I take the close of where we were on the 30th, the close was 137.64. So if I take this and go up to 137.64, pretty close to it, I'll say right there, and then go up 6%, let's see where that takes us to. Oh, actually the chart won't let me go up that high. It takes me up there, and that's 5%. It is very possible that the NASDAQ 100 is going to get a bounce here from its softening, get up back into this trading channel and go back up, even though the volatility VXN is showing that your risks are increasing. Now, here on the MACD, it has softened up greatly, and it is now just below zero. Let me take you over to the thumbnail. So here we are on the MACD. It's below its signal line and across below zero, bearish and bearish. The slow stochastics on the daily chart has bottomed and is now pointing upward. So the short-term momentum is showing that we've got a bottom in. The price momentum is showing that we hit a bottom on Thursday. If this trend continues, we could potentially see a bounce here. Now this is more of a trader's mentality here, but there is some possible action going to happen here on QQQ. I definitely see the volatility increasing on this ETF, and I just wanted to bring that up to your attention. So again, this is Conservative ETF Investors. My name is Ken, and that wraps up this week's episode for your stock market update. And I hope you enjoy, and I'll see you later.